Good day. Today, we're talking about the US home builder company that's been in the spotlight recently. Despite rising inflation and interest rates, some investors are hoping that the US housing market could keep up with rising interest rates. In today's video, we're talking about how Lennar plans to compete going forward. Before I continue, please smash like button. And if you'd like to see more such videos, please subscribe to this channel. Firstly, we'll be talking about the business model of the company. Lennar Corporation, together with subsidiaries, operates as a home builder primarily under the Lennar brand in the US. It operates through Home Builder East, Home Builder Central, Home Builder Texas, Home Builder West, Financial Service, Multifamily, and Lennar other segments. The company's home building operations include the construction and sales of single-family attached and detached homes, as well as the purchase, development, and sale of residential land, and development, construction, and management of multifamily rental properties. It also offers residential mortgage finance, title insurance, and closing service for home buyers and others, as well as originates and sells securitization commercial mortgage loans. In addition, the company is involved in the fund investment activities. It primarily serves first-time move-up active adults and luxury home buyers. Secondly, we'll be looking at how the US home builders feel about rising mortgage rates and inflation. US home builder Lennar Corporation warned of a downturn in home demand as rate hike prices and surging interest rates pushed buyers to the sidelines, threatening the industry breakneck pace of profit growth. In the sector's strongest warning so far, Lennar said any forecast at this point will amount to guessing, even though the company preserved its delivery expectation for the full year at around 68 homes. Quote, the Fed stated determination to curtail inflation through interest rate increase and quantitative tightening have begun to have the desired effects of slowing sales in some markets and stalling price increase across the country, Lennar Executive Chairman Stellan Miller said in a statement. Lennar may have to reduce some home prices to support demand, company executives said in a post-earnings call with analysts. Profit at US builders such as Lennar and TR Holland are now set to cool off after nearly doubling during the pandemic, when strong demand for home from people looking remotely have driven up prices. Lennar recorded a single-digit rise in orders for the second consecutive quarter in another sign of slowdown. Still, the higher home prices and demand helped it report a second quarter profit of $1.32 billion or $4.49 per share, beating any expectation of $3.96 per share. Revenue was $8.36 billion, above expectation. Next, we'll be looking at the third quarter of the company. Home builder Lennar Corporation reported a better-than-expected profit in the third quarter, benefiting from record high property price as demand far outpaced supply that was crippled by raw materials and labor shortage. While home builders have been enjoying steeper prices for a while, the US Federal Reserve decision to continue raising interest rates to clamp down on inflation has made homes even less affordable for buyers and starting to affect sales. For the third quarter report, Lennar said new orders fell about 12% to 14,366 homes. Sales have greatly been impacted by rising interest rates, but there remains a significant national shortage of housing, especially workforce housing, and demand remains strong as we navigate the rebalance between price and interest rates, Lennar Executive Chairman Stellan Miller said. Lennar, the second largest home construction company in the US, said it expects delivery between 20 to 21,000 homes for its fourth quarter with gross margins between 26 and 27%. Interest rates are moving and likely to continue to move, and the housing market will continue to rebalance prices and interest rate in order to meet demand, Miller said. On an adjusted basis, Lennar earns $5.19 per share in the third quarter ended August 31st, beating analyst estimates. It posted an about 29% rise in the quarterly revenue to $8.93 billion, but missed analyst expectation. Net income rose 4.3% to $1.47 billion. Thirdly, we're looking at the fourth quarter results of this year. Home builder Lennar Corporation forecasts a slowdown in new orders for the first quarter as high mortgage rates make property unaffordable for some buyers. Lennar expects new orders in the current quarter to be between 12,000 to 13,500 homes, compared with new orders for 13,200 homes in the fourth quarter. Over the past 2 years, high demand for homes from people working remotely due to the pandemic drove up prices across the US, boosting profits from builders such as Lennar and Leah Holden. However, the US Federal Reserve's aggressive monetary policy tightening to curb decade-high inflation have made borrowing more difficult for customers as mortgage rates have more than doubled since then. Home builders has also been hit by worker and supply shortage that have driven up costs. Sales of previously owned homes fell for 8 straight months in September, while home building drops, signaling that high mortgage rates are choking the housing market. Net income attributed to Lennar rose to $1.32 billion, or $4.85 per share in the fourth quarter from $1.19 billion and $3.91 per share earlier. The company reported revenue of $10.17 billion compared with an estimate of $10.10 billion, according to data. Finally, we'll be talking about how I feel about the company. Due to rising inflation, the Fed have no choice but to raise interest rates to curb rising inflation. However, as interest rates started to rise, mortgage rates will start to rise as well. This will definitely lower the demand for homes, which could drag down the house prices. Luckily, the global economy is still facing a supply crunch, therefore margins are not seriously affected by it. If recession does not come, or is a mild recession, I feel that the housing market could use this time to build all the reserve homes before signing for more contracts. In conclusion, I strongly feel that Lennar shares are currently slightly undervalued. Despite the headwinds of both rising inflation and interest rates, I feel the company could easily cruise through the current headwinds and complete some of its backlog. The only issue that we need to watch out is with the Fed in the fight to bring down inflation, actually bring us into a recession. Given that this potential recession is caused by the Fed, it's extremely unlikely for the Fed to come and bring us out of it. Hence, this is the only reason why I feel the company is slightly undervalued and not severely undervalued. With that, thank you for a nice day. Goodbye.